Welcome to Defi Crypto Today. Our topic today is delta neutral leverage farming. What is that? Well, you probably noticed that the crypto market has been going down a lot lately and a lot of tokens have crashed and whatnot. So delta neutral strategies help reduce the risk of tokens going down. And in this case, we're using leverage. So we borrow in order to enhance the yield on the farm tokens. Okay? It sounds complicated, but it's not that bad. I'm going to explain this in detail. And this is going to be the first part of a series. I'm going to show you several strategies on several protocols where we can apply delta neutral strategies. It's a lot of fun, and there's so many strategies. It's really phenomenal. So let's start. Okay, so what we want to do is earn yield whether the token goes up or down. So we don't care too much if the token is going to go up or down. We're still making money, and that's the fun part. So we're going to have a quick look at a graph here. Okay, so we can make profit in up and down markets with this. So if we look at this, we have three bars, three curves. And the first curve is the blue curve, this one. Okay, and that's when we're going long. Going long means we're buying the token. Okay, that's all it means. We're buying the token. So if the price goes up, we make money. If the price goes down, we lose money. So this is the middle point, okay, when the price is not changing. So we're at zero, okay? And when the price goes up, we're making more money, right? And if the price goes down, we're losing money. Normal thing, right? Now, we can also do the opposite. We can sell the token. That's when we call it shorting. So we're taking a short position on the token. So the short is on the red line, okay? And when the price goes up, we lose money. So this is the middle line. So this way we lose money, that way we make money. So we lose money here when the price goes down, and we make money when the price, we lose money when the price goes up, sorry, and we make money when the price goes down. So what if we combine both of them? Well, we get the yellow line here, okay, and we find that when we're above the zero line here under the curve, we make money whether the token goes up or down. All right, so but there's a limit in these strategies, and beyond a certain point you lose money also. So if you go under that line, when the yellow line is under the zero line here, we're losing money. All right? So, why is it called delta? Delta is the Greek letter that looks like a triangle. That's a capital, the uppercase delta, Greek letter delta. And most of the time in math, science, finance, or whatever, it means change. So here we're talking about a change in price for the token. So the delta can be either positive or negative. So if the price goes up, it's positive. If the price goes down, it's negative. All right, so you have a positive change or a negative change, and it's represented by the symbol delta. And that's why we call it delta, right? So what is a delta neutral strategy? Well, a delta neutral strategy means that we're taking two positions on the same asset. So this could be stocks, could be bonds, could be options, could be futures, could be crypto, could be currencies, could be anything. So we take two positions on the same asset to ensure that the price changes cancel out as much as possible. The strategies that we're using, I call them for simplicity's sake delta neutral strategies, but they're actually pseudo delta strategies. They don't completely cancel out in all circumstances, but they cancel out most of the time, and it's good enough for our purposes right now. So essentially what we're aiming for is to have the plus change cancel out by the minus change, so that we get a zero change. That's the neutral, delta neutral, okay? All right, so what is a long position? I talked about it earlier. A long position is a position where we buy the asset, okay? So if there's a plus, if the change is a plus, okay, it's going up. What is a short position? A short position is a position where we sell the assets. When the price changes, we're getting a negative compared to the other one. Okay, so if the asset goes up $1 and we're selling the asset, we're losing $1. We're losing $1 when the price goes up. And if it goes down, we're shorting, we're gaining $1. All right. All right. Sometimes it's confusing. All right. So what we're going to do, we're going to use Tulip. Tulip is a protocol on Solana. Used to be called Sol Farm. They changed their name for Tulip. Whatever. So sometimes if you look in their documentation, they're going to say Sol Farm, but they change their name to Tulip. Okay. And I decided to use the Atlas USDC LP pair simply because Atlas is okay. It's very speculative. However, it's been around for several months. It's not a brand new project. The project is well funded and so on. And if you don't know what Star Atlas is, it's this thing here. Okay, so it's going to be a game online, and you can buy all kinds of stuff. Like you can buy a spaceship, you can buy a planet, whatever, all kinds of stuff. It's supposed to be it's supposed to become something really amazing. Anyway, so you got like really amazing animation and this stuff. So hopefully it's gonna work. It's just starting, but anyway, so it's a well-known project. It's not a fly-by-night project, so I want to stay away from something that's too new, okay, just because of the risk. All right, so this is what we're going to do. We need to have two positions, a long and a short position. So I'm going to demonstrate it step by step so you know what to do. And also at the end, I'll show you a secret that nobody talks about. So stay till the end. All right, so we're going to do an Atlas long position. Okay, so basically we're depositing 100 USDC in the 3x Atlas USDC LP pool, and we're going to borrow USDC to buy Atlas. So we're going to be long on Atlas. Okay, so this position means that when Atlas goes up, we make money. All right. At the same time, we're going to have a second position. We're going to go short on Atlas. So this time we're going to deposit 300 USDC in the 3x Atlas USDC LP pool. We're going to borrow Atlas this time. And we're going to short, so that means we're shorting Atlas. All right. Why is it 300 and here 100? This is to balance out the value. Okay. So if Atlas goes up one way, it has to be counterbalanced the other way, right? And we need to have this ratio of 1 to 3, okay? Otherwise, it's not going to balance, and we're not going to be delta neutral. Okay, so briefly, this is what it's going to look like. Okay, this is the long position. So we deposit our 100, and we're going to borrow USDC. Okay, and we're going to get this graph. I don't know if you can see here, there's a red line. That's a liquidation line. Okay, so let's do that. We're going to deposit 100 USDC, and we're borrowing USDC. Okay, so we're going here. Now this is on Solana. So you need a special Solana wallet. Most people are going to be on the Phantom wallet, PH Phantom, not F like, and it always asks for the freaking password. I guess it's good for security, but it's a little bit annoying when I want to do a video. Anyway, so I'm going to put my password in there. Give me a second. So I put a little bit of money so we can do the demonstration. And now that we're on Tulip, it's tulip.garden. I'll put the link in the description so you know where to go. It's a big project. As you can see here, the TVL is 800 million. Okay, so it's not a small project. It's fully audited. So for that, the protocol itself is relatively safe. Relatively safe. Okay, don't think that anything is 100% safe. All right. Now, first thing first. Whenever you want to do these leverage delta neutral farming things, always use an LP pair that contains a stable coin. On Tulip, you have the choice between USDC and USDT. Okay, so, and you can select them here. Okay, so if you remove this, you can type what you want. So if you type USDC, you're gonna get USDC, and then you can select all the pools that have USDC in them. Okay, so now you only have USDC pools that are paired with whatever other token is there. Now, I put them in order of APY because there's some fantastically high APYs here. However, not all of them are suitable for a delta neutral strategy. Why? Well, here you can only borrow USDC. You cannot borrow the other token, the cave token here. And to make it work, you need to be able, on one position, on your long position, you need to be able to borrow a USDC. And on your short position, you need to be able to borrow the other token. And in this case, it doesn't allow us, it only allows us to borrow USDC. So it's only a one-sided position. You only can get long on cave. Okay, so it's not going to work for delta neutral strategies. Use it for other strategies, okay, but not this one. And also, it's probably very, very, very speculative. The token probably varies super wildly, and that's why there's this super crazy APY here of 455,000%. Okay, very risky. Okay, so think about it twice, and probably don't go with 3x on this. You can lower it to 1.5 or 2x or whatever you want to do. Okay, of course the APY is going to go down, but your risk is going to go down as well. All right, so we're not going to use this. We're not going to use this one. We could use this, okay, if we really wanted to, but I'm not very familiar with DFL tokens, so I'm not going to use that right now. So instead, I'm going to go with my first choice, which was Atlas, if I could spell it. Okay, now I want Atlas USDC and Atlas USDC Orca. So there are two of them. The other one I don't want because the Ray token is not a stable coin. So we're taking this one and we're taking this one. Okay. So one of them comes from Orca, One of them comes from the Radium protocol. Okay, and as you can see, there's a slight difference in the rates. Exact same LP, it's just that Orca gives a little bit more yield than the other one. So since I want to maximize my yield, I'm going to go with the highest one. The rest is pretty much the same. Okay, so, and if you look, the borrowing rates are the same, I think, if you look for both of them. So 49%, 29%, and this one, yeah. So the borrowing rates for the two tokens are the same. As you can see, I can borrow Atlas and I can borrow USDC, right? Okay, we're gonna leave it at 3 because that's how I calculated it earlier. And we're gonna go for farm. All right, now I want to show you the simulator, because it really shows nicely what happens, okay, or what can happen. So as I said earlier, I'm going to put 100 USDC in there, okay, and as you can see, it makes a pretty little graph here. All right, now what we're doing is borrowing USDC, okay, and buying Atlas. So right now, Atlas, we're buying 100% Atlas. See, this is a little wheel and can move this around, okay? And can choose what you want. In our case, we decided that we are borrowing USDC. Asset borrowed, okay. Sorry. So we are borrowing USDC. Okay, assets borrowed, $200 worth of USDC. Why is it 200? We supply 100 and it's a 3x, so total is $300 being used. Okay, the way it's going to be positioned, half of it is going to be USDC, the other half is going to be Atlas. Okay, so it's going to swap 150 in there. We are borrowing this, and it's going to go. Now, be careful. You have this red line here, okay? That's your liquidation threshold. If the price of the Atlas token drops below this point, you're going to get liquidated, okay? Because the two positions cancel out, but they're not bunched together. That's the issue. All right, so let's farm this, and we need to approve. Typically, it's pretty fast on Solana, just that in this case, there's several transactions being performed. All right, so position has been opened. Now, if we can check our positions, if we click down here and look at your positions, and we're right here. Okay, now we have our kill buffer. If the kill buffer drops to 0, we're in trouble. Okay, and then we should add collateral at that point. Otherwise, we're going to get liquidated. Okay, that's what that means. So always watch this. You should watch this every day, just to be sure that your positions are okay. Okay, now we need to do the opposite. So we're going to borrow the Atlas token this time. So we're clicking on farm. You're going to see the simulator. And this time we're putting 300. Okay. And we're borrowing Atlas, not USDC. All right. And as you can see, the liquidation threshold now is above, okay, the midpoint, not below. So we're going to be having two liquidation thresholds. If the price of the Atlas token goes up too much, we're going to get liquidated. If the price of the Atlas token goes down too much, we're going to get liquidated. So we have to stay within a certain range. That's why you have to check these positions every day, okay? Just to make sure that you're okay, okay? You have to make sure that your kill buffer is above 0. All right, so let's farm this. So we're going to end up with two different positions in our open positions. One is the long and one is the short, and they cancel out. Okay, the amounts here are different because we need them to cancel out properly. Okay, so when we're borrowing Atlas, we have to deposit more USDC. All right. Okay, so let's look at our positions and refresh button. And we have our two positions. And our kill buffers are 18% each, give or take. And that's good. So they're all above zero, so we're fine. Okay, so check this every day, just make sure that it's above zero. If it goes down to zero, you have the choice of adding collateral or closing your position. Okay, it depends if you want to keep the position open or not. If you're tired with the position, you can hit close. So to close it, you click like this, and now you can choose to convert all the money into USDC if you wish. So I'm going to close it because I'm going to show you a special transaction after that. Okay, that's a secret thing. Okay, so keep watching, you're going to see something new. All right, so we close the position, prove. Yeah, normally if I didn't discover the new thing, I would have left these two positions open, but now I want to cancel them and show you something new that I discovered playing with the dials today. I didn't see that documented anywhere. Maybe it's documented and I didn't notice it. Anyway, if anybody knows better than me, let me know in the comments. I like to discover new stuff all the time. So we're going to close this. And in this case, we're going to leave it like minimize trading because it's going to give us USDC. If we hit here, it's going to give us Atlas, and I don't want the Atlas token at the moment. You can choose to get Atlas tokens if you think, if you're very bullish on Atlas. It's up to you. So I'm closing the position. And approve. All right. So prior to closing this, the two positions were designed to cancel out price fluctuations in the Atlas token. Okay? But they're separate. So one doesn't depend on the other. Okay? In the end, they counterweigh each other. Okay? When one goes up, and when the token goes up in value on one, it drops on the other one. So the net result is delta neutral. Okay? But each position individually is not delta neutral. Okay, so you have to keep that in mind. Okay, you have to watch both positions. If you want to use the delta neutral strategy, you need two positions. However, I'm going to show you a secret in a couple minutes after I show you the documentation that you should read. So the links are in the description. This is from Tulip. So they explain everything you can do on the Tulip protocol. You can lend money. So for instance, you can get some pretty juicy rates on USDC, USDT, for instance. If you want to earn something on stablecoins, that's not a bad idea. They explain the vaults, okay, where you can deposit money on LP pairs, okay. And then they explain the leverage farming, yield farming, which we were using in order to create the delta neutral strategy. All right, so they explain that a little bit here, and they show the pretty curves and so on. Now they're talking about an in-depth article and some Google Sheet calculator. So the calculator is here. The link is in the description. So you could play with the numbers in the yellow boxes, okay? Just follow the instructions, and when you change the numbers, the graph changes automatically. There are two graphs there, okay? And if you look down at the bottom, it talks about the pseudo delta neutral LP farming. All right, so you can use this tab to evaluate your strategy before you do it if you want. All right, now they also talk about the in-depth article, and that's coming from here. This article was written by Alpaca, which is another lending protocol, and the next video in this delta neutral strategy series is going to talk about Alpaca. I'll do an example with Alpaca step by step. Okay, so they talk about the article. Remember, I stole this graph earlier, and they explain the strategy here and so on. And they have more graphs, and actually this is a nice little graph. I should have showed it to you earlier. It shows you where you're in profit and when you're at a loss if you use a delta neutral strategy. Okay, so if the price of the token drops too much, you're going to lose money, and if it goes up too much, you're going to lose money also. So you're in the green, literally here, in the middle. Okay, so you want your token to stay within this range. All right, and remember the word liquidation threshold. The liquidation thresholds are not right here, they're somewhere in here. So you start losing money, and eventually when you lose too much at both ends, they liquidate you. Okay, so either at the top or at the bottom. You can lose a little bit of money, but they won't liquidate you. But if you go beyond a certain range, they will liquidate you either at the top or at the bottom of your positions. So let's go back to the presentation and let's talk about the secret that I discovered today. I'm calling it the mixed position because I discovered by playing with the dial in the middle that we can get something that looks like, to me, like a delta neutral strategy. And like a delta neutral strategy that we can do all in one shot. Now, I'm not a mathematical expert, okay? I know some math, but I didn't study this specifically, okay? So if any of you know better than me, let me know in the comments. I always welcome comments that are constructive and that help me learn new stuff. So if you can demonstrate what is actually going on with math formulas and all that jazz, okay, I would welcome that. But I think I discovered something really neat. Okay, so I'm going to deposit 400 USDC in the 3x pool, Atlas USDC LP pool. And I'm going to show you that we can at the same time borrow USDC and borrow Atlas tokens. So to me it looks like we're doing a delta neutral strategy. And there's a certain percentage that I discovered that maximizes the earnings and pushes the liquidity threshold outside the range. So it looks like we're not getting liquidated at any price that the token reaches within the graph. Maybe beyond it, maybe if it goes above a certain range, we might get liquidated, but it's not visible on the graph. So I'm going to show it to you. And we're going to actually do it. So go to leverage farming. So we're using the same tokens, and I'm still going to use the Orca LP pool. Still going to use 3x. Let's look at the simulation. So we're going to put $400. So that was basically the same amount of money I was using in the two the two positions, but I'm putting them together now. All right. So this is the graph. There's a liquidation threshold right now because right now we're just borrowing Atlas. So we're short on Atlas. But if I move this dial around, you see the graph changes, right? And you see that the liquidation threshold is now on the left if I borrow more USDC, and if I borrow more Atlas, it's on the right, okay? But if I move around and I go exactly to right here, There's no bottom liquidation threshold and there's no top liquidation threshold. I'm imagining that the liquidation threshold will be further on the right, but it's not in this range. And there's nothing on the left. Okay, so I'm thinking that it would have to go down to 0, I guess, to get liquidated at that point. But above, it's probably just beyond this price here of 23 cents and a half. I'm guessing. I'm not a math genius, so I'm just guessing at this point. But this is really neat. It's also, if we, let's say I'm pushing this to a year, we can see how much money we could be making potentially if we were to wait a whole year. Now, no matter how long we are staying in this position, we're still making a profit at whatever price the token is within this graph. As I said earlier, probably we get liquidated if it goes way over. Okay, but the graph doesn't show that to us. So, like for instance, we're depositing 400 and we could be making an estimated profit of $1,200, or actually more than that, $1,385 if we're to keep this position open for a year. Now, what is interesting is that there's no liquidation threshold. So what this tells me is that it's probably less likely that we're going to get liquidated because I can't see the liquidation threshold, as long as these rates don't change too much. Obviously, if the borrowing rates go up a lot and the yield farming goes down a lot, we're probably going to lose money at some point. Okay, but I don't have the math in front of me to tell me where the problems are going to occur. I don't expect this to be perfect. I don't expect this to be 100% safe, okay? Keep that in mind, okay? I like to see numbers to tell me where things are going to break. But right now I can't see it, okay? So this looks really interesting. And we're getting that at 67%, okay? If we borrow Atlas at 67%, and we borrow USDC at 33%, if we create this mixed position, okay, so we're short on Atlas at 67% here, and we're long on Atlas at 33%, basically because we're borrowing USDC to buy Atlas, okay. It looks like we're maximizing the profit, and it looks like we're minimizing the risk of liquidation. That's what it looks like to me right now. If you think I'm wrong and you can prove it with math, okay, I want to see the math, I want to see the graphs and everything. If you can prove it to me, put the comments below. On the other hand, if I'm right, well, and you think I'm right, let me know also. I'm discovering this. I just noticed this today. Okay, I was playing around with the dial and I found this. So anyway, you might find this useful. Okay, to me it looks like an easier way to use a delta neutral strategy on the Tulip protocol. So that might be interesting. So I'm going to do it. I'm going to farm this. And as an experiment, I'm going to leave it on for several days and see if it breaks. Okay. The market is a little bit crazy these days. There's a lot of fluctuations on the market. So if the price of the Atlas token tanks completely, maybe I'm going to get liquidated. I don't know yet. So I'd like to see what happens. All right. So transaction is done. Let's check my position. Let's refresh. And there it is. So I'm, again, 18% kill buffer. So I'm okay. And this one, I'm going to leave it like that. And I'm going to, because it looks to me like it's applying the delta neutral strategy right now. That's what it looks to me. So I'm going to leave it. And if it breaks at some point, I'll make an update. So, and I'll let you know. But you might want to try this strategy if you think it's good. And let me know in the comment what you think. Discovered this one today. All right, so there's going to be other videos in this series. Next one's going to be about alpaca, and we're going to do some on Terra as well, and on any ecosystem I can find something fun to do with Delta Neutral. All right, so that's it for this video. If you like this kind of stuff, please like and subscribe. Don't forget to ring the bell, download the free book, input your name, your email, submit the button, and then you get a big fat button that says download the free book. If you don't want it for free, you go to Amazon, you pay $5.99 to Jeff Bezos, and Jeff will send you a whole $1. See you.